Well, hi there. Um, Hi there, everybody. Yep. Hi there, everybody. Thanks so much for tuning in. This is Trade Setup right here on BloombergQuint Live. I'm Neeraj Shah, and this is the last day of the week, considering that tomorrow is Ganesh Chaturthi. So, well, and also weekly options expiry, so promises to be a volatile day. Now, speaking of volatility, I was speaking about this yesterday, how volatility's come back meaningfully. It's not left the crypto markets, for example. Bitcoin continues to remain under pressure. What the big B by correcting has done is pull down some of the other cryptos along with it. And there the volatility also persists. Now, Bitcoin had issues of its own, right, because of El Salvador and the adoption and the glitches thereof. But what the Bitcoin fall has done is brought some key technical levels into consideration and brought down other cryptos along with it. Ethereum and some of the others too have come off. So volatility in the crypto market for sure. Volatility in our markets, well, remains to be seen. Keep in mind, just before I actually move to the equity markets, keep in mind what's also added to this volatility in the crypto market, and a lot of you are crypto fans, right? That the SEC has sent a warning letter to Coinbase, and threatening them to sue them if the exchange lets customers earn interest on the digital tokens. Now, what the SEC effectively is saying is that they will bring about all regulations that they deem fit for any kind of cryptocurrency. And it's kind of a veiled warning to everybody else in the system in the US, of course. India has its own rules. But what I'm trying to say is the price of the Bitcoin, irrespective of the rules of a country, will be determined by some of the largest players in this ecosystem. And therefore, what the SEC does would be a big determinant of what happens to Bitcoin, what happens to some of the others. So keep this at the back of your mind. This is the story that I'm talking about. So pretty interesting piece to read as to what's happened in the crypto world in the last 24 hours. Now, let's move on to the equities. Remember, this week remains very, very important from a central banking action perspective and from Joe Biden's perspective. But the US markets marginally off yesterday. As you can see, it was not a big bang gash or anything, but it has brought about a weakening of the sentiment, if you will. In fact, there's this wonderful chart on the Bloomberg terminal that my producer Virat has brought out for us. It shows how, from a key technical level, apparently, the S&P 500 and the Dow Jones have extended fall. So look at this, the record highs, and since then they've been coming off. Both the S&P 500 normalized. The white line is the S&P 500, the blue line is the Dow, and both of these have shown corrective moves from all-time highs, and they're continuing. That's the point. This is the third consecutive day of a corrective move for the US markets. Now, will this bring about weakness in Asia? I presume it would. Will it be a prolonged bout of weakness? Who knows, frankly. But if you look at the Asian screen today, a tinge of red. I'm sure the SGX Nifty would indicate that it's a tinge of red in the Indian context as well. If it's not, then the SGX Nifty is not indicating correctly. Let me put it that way. I haven't seen the SGX Nifty today. I didn't need to really. It'll come up on your screen next, but the SGX Nifty would be showing a tick of red. So 50 odd point. Nothing dramatic, as I said. Can it become dramatic? Maybe it could. The breadth certainly has been indicating this now. Remember, yesterday when we were talking on the trade setup, the market breadth day before yesterday was extremely weak, 150 to about 350 or thereabouts. The MOV function will next tell you what happened in trade yesterday. But I can tell you this, that individual portfolios didn't have the best of days, even if the market breadth was even Steven. So a bunch of stocks came off in yesterday's trade as well, from chemicals to even IT majors or IT miners, if you will, had a tough day, and real estate continues to sulk in the last couple of sessions. Let's see if these stocks hold out in the days to come. There were some individual reasons why. For example, InfoEdge went up 8%. There was an ISEC note which also led to that bullishness. Alok Industries went up, and some of the other textile names went up because of the textile package Trident, for example. But there are idiosyncratic reasons why some of these individual movers did what they did in trade yesterday. Now, what's the trade setup really? I was speaking to an FI dealer yesterday, or a dealer who looks at the FI positioning in his brokerage. I was saying that the trend of the increase in the long stock futures positioning by FIs has reduced over the last 2 or 3 sessions. Remember, at the start, you may not remember, but I'm just saying at the start of September, I'd mentioned about how August was punctuated by increase in single stock long futures positions by FIs that has started to come off in the last couple of days. So you've got to be mindful of that. The broader markets are cautious, never mind the breadth being even Stevens yesterday. And I think profit booking has continued at dealer desks in small cap stocks. And now this, I was getting the information from a couple of very local HNI stroke retail dealers who were telling me that there is fairly large degree of profit booking happening at the small cap end of the market. Auto stocks look particularly weak, and people tell me that there could be a round of correction out there. So those are some that you got to watch out for. It may not happen, by the way, but I think it looks ripe for a corrective move. There is, in fact, a very good note today, which I'll bring to you on M&M, which might be symptomatic of what's happening there. But first, some of the key names to monitor in the session today. And it's a long list today, by the way, so I'll move to stocks almost very, very immediately. SBI Life, Canada Pension Plan Investment Board will be selling up to 20 million shares. The shares are offered at a discount of 0% to 5% at 1159 to 1220. So 5% to 0% discount. And I think there is an option to increase the size of the offering. But effectively, SBI Life was weak yesterday, about 1.5% lower, because the word was out on the street. Smart money or smart brains knew that this offering that is coming up. You could have heard that in multiple dealer checks as well that were streamed on multiple media platforms. But so it was known. So therefore, there will be a few short positions already existing. If this gets subscribed to very, very well, because SBI Life had a very robust month of August as far as their business goes too, then the stock may actually show a meaningful bounce too. So please be careful. If you're trading it today afresh this morning, don't look at the discount of 5% and believe that it will definitely go down 5% or will continue to stay weak below 5%. That may not be the case. So keep that at the back of your mind. Jindal Steel and Power, they've prepaid about $105 million loan of the Australian unit. It's reduced the debt by about 50%. And well, seemingly they are on track to be net debt free by March 2023. They've been talking about it for a while, but I must say they made all the right noises and put their best foot forward when it comes to this. So the proof of the pudding is always in the eating. You have to say that whatever the market has eaten this thus far from JSPL side, it's been as per standard. So not bad going, you have to admit. UCO Bank, the RBI has freed UCO Bank from its PCA framework. It's no longer in the breach of the PCA parameters as per the Reserve Bank of India. Remember, since May 2017, UCO Bank was put under PCA. The interesting one, it's a very small, tiny tune, but an interesting development. So I thought I'll bring it to you. Okay, let's go to Repro India. I actually wanted to do Repro slightly. Okay, yeah, this is okay. These are a few stocks that you got to monitor. So first, Repro India. There are marquee investors going to invest in the company. Now, what I mean by BSE is not that BSE is saying this, but if you look at the release of Repro India on the Bombay Stock Exchange post-market hours yesterday, it will show some very interesting names. If you can read between the lines in some cases. So Param Capital is Mukul Agarwal. There are a couple of other marquee names out there who are putting in money in the pref allotment to Repro India. So the stock was up about 1.5% yesterday, but the names would bring about some interest in Repro in the session today. So if it goes up, you know why it is going up. Mukul, Madhukela, these names would evoke some interest. BASF, the CCI searched the local offices of BASF. Now, this is not for it's Competition Commission of India. So don't think of it as a very big negative, as if there is an income tax raid or a tax evasion raid. No, but this is the Competition Commission of India searching for papers. And I think BASF said that they are cooperating, and thus far there is nothing incriminating that has been found. So it may not even be a big negative, but you never know how the market takes it, right? Because the announcements might just come in like this across your Twitter handles, for example. Please be mindful of the fact that it's not a big negative. If indeed it corrects, then maybe it's the market perception, or maybe something gets found out and people might know. But as things stand, as of late last night, there's nothing dramatically negative in this CCI search at BASF India. So let's wait and watch what happens there. ONGC is also a stock to monitor. I've been talking about upstream companies gaining some strength. By the way, Oil India is now at 190. So keep in mind, some of these upstream names have moved up. But ONGC, the news is that their company is exploring a purchase of a significant minority stake, 4 billion plus, in Sangomar oil project of the coast of Senegal. The company is discussing acquiring a 20 to 40% interest in the field. I don't think, I don't know. Let me put it that way. It'll be interesting to read the JP Morgan and some of the other notes on this. How big a deal this could be, either on the upside or in terms of ONGC deploying money, I think best left to the experts who track this very, very closely. But it's an important development, a stock that you should keep on your radar. Some stocks and these insider trades get reported every now and then, right? But the reason why I'm bringing these three stocks is because of the last 2 weeks, I've seen consistent such moves on either the buy side or the sell side by the promoter entities. So Alcala Mines, fabulous stock, very deep moated company, great franchise. Promoter Yogesh Kothari has been selling shares consistently now for the last few days. Same Gujarat Fluorochem. I mean, they've got some tremendous prospects as per what brokerage notes suggest. But Inox Chemicals LLP has been selling some shares for the last few days, I might add. And between September 6th and 7th, they've sold 28,000 more shares. RPSG Ventures, Stel Holdings, again, consistently buying shares all through. Now, this may mean nothing, by the way, viewers, but I'm just bringing it to your notice. Keep this at the back of your mind. There's been consistent buying or consistent selling by the promoter entities into some of these names. And Somani Home Innovation, very quickly, move on to that. EQ India Fund and Equity Intelligence, which is Porinju Veliat's firms, have sold some shares. And Cohesion MK Best Ideas Sub Trust, which is Madhu Kela, I presume, has bought about 10 lakh shares out there. So I'm guessing it's that entire transfer that has happened adds up to about 1.45. So Equity Intelligence sold and Madhu Kela's fund bought into Somani Home Innovation. Depending on who you follow, if you follow, you might want to study these names. Lastly, a couple of brokerage notes. Jeffries on Mahindra and Mahindra. I was talking about how autos may look slightly wobbly. Now look at this note. The rating is an underperform. The target price is at 635. Jeffries is saying that their analysis suggests that tractors are showing signs of cyclical weakness. One of the reasons why the August registrations went up just 7%, whereas wholesales fell about 18%. And this would be interesting as to what happens in the next month too, therefore. New SUVs, according to Jeffries, have failed to boost the market share so far for Mahindra & Mahindra. They have launched that XUV 700 or 300, I'm forgetting which one, but 700, yeah, as Virat tells me. But with a lot of fanfare, but apparently it's failed to boost the market share thus far. And Jeffries believes that the stock's underperformance to Nifty should intensify as tractors weaken. So do watch out for Mahindra & Mahindra in the session today. Could be an interesting one. Let's today or over the course of the next few days, and therefore portfolio it down to, how do I say, escorts. And by the way, you guys must be knowing this if you guys have thought of booking a vehicle. But a couple of my colleagues in office booked a vehicle, Hyundai, I presume, or Kia, and they were told the waiting period extends from 5 months to 9 months. Now, this shows that the semiconductor shortage is alive, kicking, and hurting companies. And which is why I was saying that maybe autos do distinctly look weak, because even if the companies, there's nothing wrong at the company level, but if there are shortages, and maybe the semiconductor shortage is a thing of the past and things might be improving going ahead, but effectively shows that the performance will not be at the full strength, and you have to bear that at the back of your mind. The last 3 months, save for Balkrishna Industries and TVS Motors, most of the other stocks have lagged. Let's see if it's already in the price or not. Last brokerage name is Morgan Stanley and ICICI Bank. And the reason I bring this up, it's not because the note is something dramatic, but it's one more large, smart analyst reiterating their call on ICICI Bank. Almost everybody believes that ICICI Bank is amongst the top picks currently in the Indian banking space. Credit cost moderating, continued improvement in PPOP margins, which Morgan Stanley says might drive higher ROEs over the medium term. And the valuations have re-rated and reflects improved ESG initiatives at the bank. And this is something that a lot of people have spoken about. And that Sanjay Bakshi is doing some tremendous stuff there. So do watch out. ICICI Bank seems to be emerging as a clear crowd favorite. Now, typically crowd favorites don't go that far, but in ICICI Bank's case, might well be different. Thanks so much, because valuations are in its favor. Anyway, so thanks so much for tuning in today. Keep in mind, autos maybe slightly wobbly. Some interesting mid-cap, small-cap fund not fund recommendations. Mid-cap, small-cap ideas in which there's been some interesting buying and selling, either by large smart money or by promoters. So you might want to watch out for that. And I will watch out for JSPL individually. That is an interesting one, as well as SBI Life. What if the demand is very successful and maybe the stock bounces back? So thanks so much for tuning in to this very long trade setup. To all of you, happy Ganesh Chaturthi, and to all the Jains out there, Michami Tukra.